Hello again, and thank you for joining me for this week's market update. This is my little update just to go over the basics about how the stock market in general has been behaving for the last week. So, if you don't have the stomach to watch the stock market every day and be up and down on that roller coaster, but you also don't want to be living your life with blinders on and not knowing what's happening with the stock market, watching it once a week, checking in on the major indexes, and learn a little bit about what's happening could be a way to go. So this is just a weekly touchstone to connect with you and see what's happening in the markets today. So I hope you enjoyed today's market update. Things have been a little bit down recently in the Dow. So I'm going to take a look at the Dow. For today, the Dow is actually down about 0.25%. Okay, well that's not too big of a deal in the scheme of things. So if you had one share in like an ETF that follows the index, if the ETF was priced at about $46,000, you'd only be down about $120. So in the scheme of things, and that much money, that's not too much. That's about 0.25%. But let's take a look at how things have gone. I like to look at when the stock market's a little bit more volatile like it has been recently. We'll look at the 1 day, the 5 day, the 1 month, 6 months, 1 year, and 5 years. So I want to take a look at what's been happening in the 5 days. Now the reason why they do it 5 days and not 1 week is because there's 5 trading days in the week. So it looks at the most recent 5 trading days. And we're down about 1% over the last 5 days. So about 0.25% a day has been kind of average, you know. Let's take a look at what's been happening for the last 1 month. Last 1 month, we're down about 1.5% a week overall, down to 6%. A 6% drop. Oh no, that's starting to feel like a lot of money. I just lost $3,000 if I had about one ETF that was priced at the same price as the Dow. We'll talk about that another time, but that's one way some people invest. But you can just think about it as 6% overall. Over the last 6 months, okay, good news. Catch your breath. Stop hyperventilating. Hopefully, if you're a long-term investor, if you've been in the Dow, at least you've been up a little bit, 1.47% in the last 6 months. So at least the 6 months has been net positive if you were investing in the Dow. Let's take a look at the 1 year. 1 year, we've actually been up 14%. Oh my gosh. Now if we're down 5% the last 6 months or so, that would mean that we've been up almost 20% at one point in this year. Well, that's amazing. A lot of people think 4%, 6%, or 8% is good. So even though we've had this conflict and things have been going bad, we'll talk about that later. What's driving the market downwards? You probably heard about that little bombing thing in Iran. Okay, well, hopefully we'll get through this okay, but I feel bad for anybody who's lost a loved one or for anybody who's been killed in that, but hoping that we have a positive outcome with nothing nuclear coming out of that, which hopefully we're preventing with the war. But if you got any thoughts on that, feel free to comment below. That's not what this video is about, just that we know that that's probably having an effect on the downward motion of the economy. So 14%, still an amazing year for the Dow, even though the last 6 months have been positive, but more recently the last month's been a little bit rough. All right, let's go ahead and take a look at, now remember the Dow is 30 of the largest stocks. We're going to look at the S&P 500, the 500 biggest American stocks publicly traded in the market. In the 1 day, they're down over twice as much as the Dow. The Dow was down 1/4. It's down a little bit over 0.5%. Over the 5 day, down about 1%. Actually a little bit less than what the Dow was. 1 month, down about 3%. So for every day, 10 days, about 1%. And then for the 6 month, pretty much a break even. So actually the Dow did better than the S&P in the 6 month, but the S&P has been less volatile than the Dow in the more recent 30 days. Let's take a look at the 1 year for the S&P. Okay, the S&P's actually been up an amazing 20% in 1 year. So that means if you had $100,000 in the S&P 500 and you were indexed to that, you would have made $20,000 just for sitting around doing nothing. Now, you can almost buy like a ham sandwich with that type of money. Let's go out and have lunch if you've been invested in there. On you? On me? I don't know. Somebody will pay. We'll figure it out. Maybe we can go Dutch. All right. You're starting to lose your appetite? All right. Well, all right. Let's forget about it. Okay. So 20%. Now remember, if 4% is good, 20% is fantastic. If 6% is okay, 20% is wonderful. If 8% is good, 20%, I'm still over the top, head over heels in love with the outcome of the last year. We've been having a good year in the stock market, but the last month has been a little bit rough. Remember, in the stock market, you will have times where your portfolio goes down and you lose money. You have other times when your portfolio goes up and you will gain money. Overall, in the last year, hopefully you've been keeping up with the S&P 500. All right, we're going to go ahead and take a look at the next index here, which is going to be the NASDAQ 100. NASDAQ 100 is down 0.62% today. That kind of reminds me of what was going on with the S&P. Let's take a look at the 5-day. 5 days, it's almost a break even, so not too bad. Let's take a look at the 1 month. 1 month, we're down 1.42%. Not too bad over 1 month. A lot less down. Let's see what the 6 month has been. Is it true that the more up volatility you have, the more down you have? Let's check it out. What about the last 6 months? Last 6 months been pretty much a break even, almost less than 0.5%. And we'll take a look at the 1 year. At the 1 year, we have made an amazing 27%, almost 26.8%. Could you imagine if you had $100,000 invested in the market and you made almost $270,000 for doing nothing more than putting your money in the market and sitting on your hands? Well, might be time to go grab dinner. I mean, forget the ham sandwich. We got a little bit more money to deal with. Let's go have some curry, maybe some Thai food. What do you think? Are you ready to pay for that? Oh, you want me to pay for it? I'll tell you what, I don't know if I'm gaining my appetite or losing my appetite. Maybe we could take turns, go Dutch. What do you think? Now you're starting to lose your appetite? Oh well, okay, let's go ahead and get into it. Now, are these results typical for the 5 years? Let's take a look at the 5 years. The Dow did 14% this year. Over 5 years, it averaged 42%, which is about 8% a year. So definitely did more than 50% better, almost about 60% better than it normally does. 70% better, do I hear that? The S&P 500 over the 5 years, typically it does, according to this, that's about 13.5% a year over the last 5 years. And we would take a look at the last 1 year where it did about 20%. So it is also doing about 60% more than it normally does, depending on which way you do the math. Let's take a look at the NASDAQ 100. NASDAQ 100 doing an amazing almost 27%. Now, is that normal for that index? Let's take a look here. Look at the 5 year. I always like to get a 5-year baseline. 5-year baseline on that was about 88%. So here coming in at about 17.5%. Okay, so a lot of good things going there. If you'd put your money in the NASDAQ 100 for the last 5 years, you would have almost doubled it. Maybe it's time to go put a down payment on the house. If you put $100,000 in there, and now you've got almost $200,000 just for putting it in the index and sitting on your hands, if you will. Not a bad way to make money. Well, I better get that first $100,000 and put it in the stock market myself. Wouldn't that be good? All right, so the next thing we're going to do is we're going to talk a little bit about what's going on, what's driving the markets down over the last few months, because we're always worried about what's happening today. Well, I'm actually more worried about what's happening in the long run, but we should be keeping our eyes on what's happening today also. So the reason why the market's down: geopolitical conflict, tensions in Iran. Okay, the Strait of Hormuz, where all our oil's flowing through, 20% of the world's oil. Crude oil hitting up to $100 a barrel. Starting to see inflation, stock market volatility. The sky is falling. Okay, is it time to sell everything? Well, I'm a little bit more of a buy and hold type of person. So, you have to make your own call on that. I'm not your financial advisor. If you need a financial advisor, feel free to connect. But for today, we're just going to look at these things. People are worried about inflation. We have definitely seen inflation in this country. Bond yields, economic. So you can look all this up. Got a good old Google search. Pretty good at keeping us abreast of things. Today, I want to talk about something special in the Middle East and some of these countries, different countries. They got a special thing they've been liking to say for over 45 years. You might wonder, why would America go in and bother this little country? Well, I feel the same way. Usually it's better just to let countries live their own life, be and live and let live. But this country for about 45 years or so, one of their favorite things to chant constantly is "Death to America." Well, I don't know what happened if finally one day somebody woke up and they got tired of hearing that shouted at them. But something happened and something changed. So unfortunately, Iran, the supreme leader of Iran, popularized the return, and they just keep screaming and burning flags and yelling at us and everything else. And I think what happened recently is something about getting nuclear weapons and even threatening to drop them possibly on California. So whether you believe that or not believe that, that's what I heard in the news. You can research it and make up your own mind about that. But maybe if they prevented a nuclear bomb being dropped on Sacramento, I might be kind of like okay with them stopping it, but I sure hope it doesn't start it. So you can have your own opinion. Let me know what you think in the comments below. This is mainly about stock market update, but it can be an open-minded discussion forum. People can have their own ideas about things. Okay, well, how are people in Iran thinking right now? Or how are Iranians in America thinking? I've heard from different people, a lot of people are pretty happy actually. They've been doing the Trump dance, doing different things. Maybe not everybody's happy about it, but some people are. A lot of people do seem to be happy about it. So I don't think that it's that America doesn't like the Iranian people, but I think it's that we don't necessarily like the Iranian government, which is in there, which their favorite thing to shout every day is death to America. I don't know why somebody wouldn't just love hearing that, but for some reason I feel a little bit irritated when I hear that myself. But you can make up your own mind if you like to hear that or not. I'm hoping I'm hoping. God, I love this country. Well, anyway, thanks for joining us today for another stock market update. I myself am kind of a little bit more in the buy and hold camp on this, waiting for this turmoil to go through. You'll have to make up your own mind, but we're hoping so far these things have been rather short, which America's been in recently, but you can make up your own mind how you feel about things. Feel free to comment below. This is Max Drew, just checking in with you and reading the indexes over the last week to keep abreast of what's happening, the up and down motion of the indexes, both in a 1 day, 1 week, 1 month, 1 year, and 5-year lens of what's happening with our markets today. Thanks for joining me. I look forward to seeing you next week. Take care. Bye-bye.
Follow, message us, or scan the QR code on the screen to learn more.